Hey guys, this is Nick from Financially Aware, and in this video I want to talk about the silver market, what's going on with it, how not to get hurt playing the silver market, and what happened when Warren Buffett made a huge purchase of silver back in 1997. And what that says about the future of silver. Is Warren Buffett going to buy back in anytime soon? You might be reading some rumors or something like that to get people hyped up. I'm going to dispel those rumors and talk about the real truth on what he feels about the silver and gold market, and also what I think about what's going to happen and how not to get hurt trading it. So around 1997, Warren Buffett bought something like 130 million ounces of silver for a price somewhere around between $4 and $5, call it $5 or so. So it was about $650 million of silver, and at the time it was the largest single purchase or company holding of silver. He bought it under Berkshire Hathaway, he didn't buy it himself. But even so, that was only about 2% a position of the value of Berkshire Hathaway at the point. So it's not because Warren is a silver bug and he was stacking, for the long term or something like that. It was basically a kind of a fundamental trade for him, a commodity trade really, that he thought the fundamentals were out of whack and it would result in a higher silver price. Now, this wasn't the first time he bought silver. He bought it back also around 1965 when the U.S. government demonetized silver and took the silver out of coins like quarters, dimes, half dollars, and all of that stuff. But, between 1965 and 1997, that's 30 years that he didn't do anything. So what happened to his silver hoard? Why did he buy it? Again, he bought it because he thought the fundamentals were out of whack, and he was really early in selling it. He sold it, and it's not like he sold it, he flipped it. He held it until about 2006, and he ended up selling it around $7.50 an ounce, something like that. So his profit really wasn't that big. It was like maybe 50% profit for holding this thing for 9 years. Not that great, especially for what he likes to buy. High dividend stocks. Back then, dividends were a lot higher. So just buying a regular 6% dividend stock would have done as good or better probably than that silver trade. And so that's why he doesn't really like silver and gold that much, because they don't pay a dividend. So around 2006, he ended up getting rid of his position, and curiously enough, he held that silver in England, and that's where Barclays, a British bank, started the SLV silver ETF. And coincidentally or not, rumor has it, whatever, that he sold his position to Barclays so they could start the SLV ETF, and they started with somewhere around 130 million ounces of silver. So where did they get it? Probably from Buffett. Okay, so why did I talk about this Buffett story of him buying silver and stuff like that? Two reasons. One, it's kind of interesting that he did buy this big amount of silver, and with everybody interested in silver, you're probably going to be seeing rumors or seeing articles by gold and silver selling companies on their blogs saying that Buffett bought all this silver before. Rumor has it he's buying more now. You better get in now before the price goes up to 200 or 1,000 or whatever. That's what usually happens in the silver market when it finally takes off. There's all kinds of rumors out there to get everybody into the market. But if you really want to see what Buffett thinks about gold and silver, you could check out this clip that's coming up here.
When we took over Berkshire, Berkshire was selling at $15 a share, and gold was selling at $20 an ounce. And then gold is now $1,600, and Berkshire's $120,000. But you can take a broader example than that. If you buy an ounce of gold today and you hold it 100 years, you can go to it every day, and you can coo to it, and you can caress it, and you can fondle it, and 100 years from now, you'll have 1 ounce of gold, and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do all kinds of things. For 100 years, it will produce things for you, and you still have 100 acres of farmland at the end of the 100 years. You could buy the Dow Jones Industrial Average for 66 at the start of 1900. Gold was then $20. At the end, it was 11,400. But you'd have gotten dividends for 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time. Now,
so you see, he thinks gold is just something that, sits there for 100 years and does nothing, whereas farmland, you can grow stuff and get kind of a dividend off the land from the crops or the cows or whatever, and still have the land. So that's why he likes stocks, because they appreciate way more than gold and silver does over the years, usually. However, he does believe that fiat currency or paper money or whatever is always getting devalued, and so he does believe that it is always going on its way to zero, and he doesn't want to be in cash. So he agrees with the gold and silver holders that fiat is going to trash, but he thinks that stocks and investments that produce dividends and cash flow and create value are much better investments, like he says in this video here.
incidentally, they're right to be afraid of paper money. I mean, they have their basic premise that paper money around the world is going to get worth less and less and less over time is absolutely correct. But
you just disagree with the investment theory beyond that.
Yeah, where they run from that, and they should run from it, is where, in my view, they make the mistake. But they have a correct basic premise.
So, how did Berkshire Hathaway stock do from 1997 until now, or from 1997 until, when silver peaked at $50 in 2011? That was a big run up. So let's compare a little bit. Was silver a better investment had he held it a lot longer? When he sold it in 2006, it was only 5 years away from the $50 peak. So he could have made another, 7 times his money from the $7 he sold it to the $50 that it peaked at. However, just because silver briefly sold for $50 doesn't mean he would have been able to sell 130 million ounces at $50. That thing was so brief that it went up real quick and it went down really quick. So you can't really say he would have been able to sell it that quickly. But just saying, had he held the silver from 1997 to, like, say now, back in 1997, Berkshire Hathaway was about $40,000 a share, and now, it's about $300,000. It went to $340,000 at its peak a few months ago. So let's say it's about 8 times more than it was in 1997, whereas silver was, call it $5 back then, and now it's 20, 23, something like that. So it's 4 or 5 times. So silver didn't do too bad, or maybe Berkshire Hathaway didn't do too good since 1997. I don't know, but it's not that bad. But if you look at from 1997 to 2011, then silver clearly outperformed Berkshire Hathaway. But like I said, it was very temporary, so it's not that great of a comparison. So what do I think about all this? Am I on the side of Buffett that gold and silver is, useless and all of this stuff, or is dividend stocks and all that is the way to go? I'm a little of both, because I am a gold and a silver bug a little bit, and I believe in holding precious metals as kind of a hedge or insurance policy against what could go wrong with the dollar and things like that, and inflation with all the debt that we're accumulating. So yeah, I definitely believe that. But at the same time, you can't argue the price of the S&P 500 or the Dow versus the price of gold or silver over the last, whatever, 30, 40, 50 years or something like that. So I definitely see the value of stocks and dividend paying stocks over the value of gold and silver. However, that doesn't mean gold and silver don't have their time in the sunlight, the spotlight. And right now we could be coming upon that point. And you see gold is now just, if it didn't already touch it, it's already, right at the level of the all-time highs in 2011. So, and silver is still like 60% off of the all-time highs. And now silver has a 30-year double top. So in 1980, it had a top at $50 with the whole Hump Brother thing. 2011 had another top at $50. So over 30 years on a chart, that's a double top. And the next time it touches there, it's most likely going to shoot right through that. If it gets there, a lot can happen in that time. However, looking at how gold has been just kind of slowly chugging along and going up and not in, big fits and panics, that's a very good sign for a continued rise in gold. And like I said in another video, silver is like the poor man's gold. And so when gold starts getting noticed by the masses and they start getting the fever, the majority of the masses can't afford the gold, so they buy the cheaper silver. And so gold is kind of like the S&P 500, and silver is like the NASDAQ or internet stocks or Tesla or Netflix or something. It gets those people that are looking for the get-rich-quick thing, it gets them in and they get the fever. Unfortunately, usually that impulse up is short-lived. It could be a very big spike in a very short period of time though, but it's usually pretty short-lived. So with that said, that's what I want to warn people about. If you're starting to get interested in silver, and I see that Robinhood traders are now loading up on SLV ETF now that the price has been going up. So that's a good indication that the same type of people that had the fever for bankrupt stocks like Hertz or Chesapeake, now that those things aren't moving and they see that silver's moving and it's only $23, they seem to be starting to pile in and sniff around, and maybe they're going to start reading articles on all these bullion and coin sites that are saying, if you look at the paper market of silver, it's 250 times bigger than the physical market. So therefore, the silver price should be 250 times its current price, which gives us a price of $5,000 an ounce and all this kind of stuff. That's the stuff that the articles start coming out when they start being interested in silver. And not even when there's interest. Those same articles, you can find those this year, last year, the year before that, They're a broken clock, and sometimes they're right eventually, but their interest is to sell people silver and get the premiums and all of that. And so when things start heating up, they start putting it in people's heads that, your little bit of money, it's the same kind of Bitcoin dream. Buy this little bit amount of Bitcoin for $1,000 and it's going to go up 500 times. Buy $1,000 of silver and it's going to go up 250 times or something like that. So that's the type of story that gets a lot of really small traders and people with not a lot of money excited that here's a shortcut to getting rich. And so they usually pile in, and there's a few ways to do it. Like I said in a previous video, you can buy the physical, but that's hard to buy and then sell. And especially now with the premiums are still high. Back during, the shutdown and stuff like that, the premiums on silver were as high as like 100%, which means if you buy it one day and you go to sell it the next day, you lose 50% of your investment. Right now, the premiums are like 20% or so, which is still too high. So that's a bad way to play it. If you're not already in physical silver, I wouldn't start buying it now because the premiums are crazy. A way to play it is the SLV ETF. It's very easy to get in and out with the click of a button, or you can buy the silver miners and gold miners, and there's ETFs for that, so you don't have to be an expert on which mining company is a real one and which is kind of a fly-by-night kind of fake one. You could just buy the ETF, and it owns a whole bunch of them, and it will participate in any ride up in silver or gold. And that's GDX for the gold, GDXJ for the gold junior miners, SIL for the silver miners, and SILJ for the silver junior miners. My personal opinion, if you're just looking right now to get into silver or gold, I would just buy the SLV or GLD ETF. I'm not saying you should buy it. I'm saying if you think gold and silver is going higher like I do, that's probably the easiest way to play it with the least amount of commission loss or something like that. Because when silver does move, it's going to move quickly, it's going to move a lot, but then it's going to come down quickly. That's what usually happens. So I know this because I was a silver and gold holder back in 2011, and I saw gold go up to 1900. I remember I was in Brazil at the time, and I was in an internet cafe, and I saw the price 1900. I'm like, wow, when I get back, I should probably sell some. By the time I got back, it was already like, I don't know, $150, $200 lower or something. Same with silver. I remember watching it go to 50, and like in the same afternoon that it touched 50, it was already like down into the 40s or something like that. So it happens quick, and it's very hard to go and sell the silver physical or gold physical that quickly. So if you're just playing it for a trade, just buy the SLV. And this is what I want to warn people about is I think silver has a ways to go, especially as long as gold keeps going up at a steady pace. Eventually, silver is going to just go parabolic, and depending where that is, if it blows through $50 easily, then yeah, it could have a really big move if it gets to $50. Now, this last move in silver was pretty quick. It's up 20% in the last week or something like that. That's a very big move, and I wouldn't be surprised if it falls back another $4 or something like that before it eventually inches back up. This stuff's not going to happen overnight, but when these numbers, these prices of the gold and the silver start really getting up there and getting people's attention, then you're going to see every article on Yahoo Finance is about should you buy silver, how to buy silver, is it too late to buy silver. Every forum is going to be talking about the ways to buy silver or how much people made by buying silver futures or the options on SLV or something, if there even are, I don't even know. So there's going to be a lot of people talking about that. That's usually a sign that that's very close to the top, if not the top. So be aware of that. And I tell you, I'm going to be aware of that because I don't know where these prices are going to end. Honestly, I don't know if it's going to make new highs above 50 or if gold's going to go above 2,000. I don't know. But, with the amount of debt that we're adding on all the time and stuff, I wouldn't be surprised at all. But the thing with gold and silver is they kind of lay dormant for many years, and then they wake up, have a big run, and then the euphoria dies down, and then they lay dormant for a long number of years. If you look at the charts, that's kind of how it works. So if you're looking to buy either gold or silver, do your research and just be aware, be ready to pull that trigger when everything is very euphoric and stuff like that. When silver went to $50, people weren't saying, $50, that's a pretty good price, it's fully valued here, there's more supply. No, they go, $50, never mind $50. This analyst said it's going to $200. This analyst said it could go to $300. So people start getting the fever in their head, like, oh my God, I'm going to be rich from my little $1,000, $2,000, $5,000 investment in silver, and I'm going to hold on and blah, blah, blah. And that's usually when Goldman Sachs is shorting silver at that time, and then it collapses or something like that. So don't get greedy. If this thing runs up, take some profits, scale out of your position or something, and don't think that this time is different and they're gonna get rid of the dollar and everybody's gonna be only trading silver and gold for bread and all this stuff. You better hope that doesn't happen, because if that happens, we'll be living like Mad Max and all that kind of thing. So hope it doesn't happen. Hope it's just inflation scare, a pretty big run up. You take some profit and you go on kind of to the next thing, and you wait for silver and gold to go back down to kind of a low level for a few years when nobody wants it anymore, and you start accumulating there when there are no big premiums on the physical and stuff like that, and hold it until the next time it wakes up and runs. So that's my talk on gold and silver and how to play the silver move if you think it's going to move, kind of like I do. But again, this is not a recommendation to buy anything. It's just me telling you about what I think about it and how you could play it if you wanted to. So if you like this video, please give me a thumbs up. It helps me with the YouTube algorithm. And leave me a comment and let me know if you think that silver is going to go to $50 or above, or is this kind of the end of the run and we're going to have another year or so of it just bouncing around $14, $15 or something like that. And as always, please subscribe to my channel if you haven't done so you don't miss any of my future videos. Thank you for watching.